Crypto markets finally break higher after quarterly options expire. Realized volatility remains low as DOVs flood the street with cheap upside calls. And Ethereum skew shows a bullish shift in sentiment. All this and more in this week's Crypto Insight. Okay, so crypto this week. What's been going on? Obviously, we had a massive expiry on Friday, which we had flagged. Probably 30-40% of all options expiring in that big quarterly expiry. We said Bitcoin was probably going to be capped at around that 45K area until after expiry. Pretty much exactly what happened. We printed down at around 44K, I believe, around that expiry period. And then we started to rally on the Friday. And then obviously we got a continuation of the rally over the weekend with that break of that key resistance that we've been flagging at 45.5K. Okay. Now we've kind of sort of touched the 200-day moving average at 48K. That seems to have provided a little bit of short-term resistance. And the target probably to the upside where we're going to see a more meaningful resistance is going to be around that 52K area. So I'd expect us to kind of really start to slow down in that 50 to 52K area if that's where we head to, okay, on the Bitcoin stuff. We had said Bitcoin been lagging a bit, risk assets, hadn't really kept up with tech. It hadn't really kept up with the NASDAQ. It hadn't really kept up with inflation break-evens, things like that, things that it had typically been kind of somewhat correlated to. And therefore we thought, post that gamma expiring in crypto, which is getting bigger and bigger, clearly as that market's maturing, we thought then that would free the market up to move, and we got that. Now, I would argue there's some fundamental things that have been coming out as well that have been helping that rally. So it's not just purely options led. Goldman's printed their first crypto OTC trade a week or two ago. So more institutional adoption to come. Russia said they would accept Bitcoin for oil and gas, as I said earlier. But probably the most impactful short-term driver has been that the Luna treasury has started to accumulate Bitcoin in the billions, right? Talking about 3 to 10 billion with the numbers they're throwing around, as keeping that on their balance sheet as a reserve asset against their UST stablecoin, right? So I think that's really helped catalyze the move up, and kind of been why it's been, quite orderly and quite a steady move up, right? As they've been accumulating that. So like I said, for me, that 45.5 that was resistance probably now acts as support. That's your first level of support. We've got some resistance here at the 200-day moving average. And then, like I say, the upside target for me is going to be around 52K, where, if I've had any tactical longs, that's probably where I'd be like wanting to lighten up on those, basically. I'm probably going to struggle to get meaningfully above that in the short term, I think. I'm not quite as bulled up as some of the crypto guys out there, basically. So then if we move over to Ethereum and what's been going on there. So I've been a bit more bullish Ethereum, as you guys know, I've been keeping an eye on this kind of Ethereum Bitcoin spread. When it broke that downtrend, that was my kind of cue to get more bullish on it, thinking that it could have some legs up towards 0.08. That would be a 10% outperformance roughly from this level here. The way I played that was through call switches, which subscribers obviously will know about. I was using end of April call switches to give that a bit of time to play out. That trade hasn't really done anything meaningful yet, but we are heading in the right direction, especially if we include today's candle. But the alts are generally doing pretty well, right? You look at Solana, it's back up to like 115 after a long, slow bottoming process. It's got some resistance around 120, 130 and 143. But I could see that thing definitely getting to around sort of maybe the 130 level in a bullish breakout scenario in crypto that we seem to be seeing. If we look at absolute levels on ETH, it's got this band of resistance that we seem to be kind of breaking out the top of. If that is confirmed, I mean, we are again at the 200. They love to hug the 200-day moving averages at the minute. It looks like the cryptos that they're very much, people use that as a bit of a level to lean on. If that breaks, then there's nothing really stopping us getting to around 38, 3,900 in my opinion. And that might be that 10% outperformance that we see where Bitcoin kind of stalls at around 50K and kind of meets some resistance, whereas ETH kind of has a bit of a a run up towards that meaningful resistance there. So that's kind of how I can see that playing out, basically. In terms of what else we did on ETH, as ETH was starting, as crypto was starting to break, we kind of topped up our ETH longs by buying some 1st of April. So end of this week, 3,400 calls. They were pretty cheap. They're around $25, obviously, as our subscribers will know. We managed to make a triple out of those. Got out of some of them at double our money and got out of some of them yesterday at triple our money. The reason I didn't run them was just because, very, very short dated options have extremely high time decay. And literally, if you get 1 day of pullback, most of the premium can evaporate very quickly. So they are a bit binary, but I saw the chances of a breakout over the weekend to be quite high, which is why I utilized that relatively cheap option, given that the vols were in the 60s, basically, right? Which is pretty cheap for Ethereum vol. Okay, so that's what I'm looking at on ETH and Bitcoin. If we then move to the on-chain stuff, my key takeaways were that top left chart showing us the percentage of supply last active 1+ years ago. So it's showing us that the illiquid supply is at the highs, right? We saw that in 2016. We saw it again in 2020. Basically, a shitload of hodling going on. Lots of wallets basically just sitting there and not touching their coins for over a year, even though we see massive swings up and down. That's a sign of a lot of hodling, a lot of long-term conviction for people who are buying that stuff, right? So if we do get a positive catalyst, then it just says there's less of that liquid supply. There's less of that supply there, which could mean that the price impact then is bigger to the upside, basically, right? Now, the chart on the top right slightly conflicts with that and shows that coins that were older than 6 months have 2% of the spent volume, right? So this is like what we call hodl waves, which show you the cohorts in terms of how long they've been holding their coins and if they're transacting. And we have seen a little spike in these like older than 6 month coins, but it's not to the extent that we've seen previously, right? When these guys have really started spending, okay? So there's still room on that. So I don't think that is a measure that I'd be particularly concerned about, basically, at this level, right? And those coins that are being spent are being soaked up because the price action is just continuing to charge higher, basically, right? So maybe Luna's buying is basically taking these guys out of their position, basically, right? Then the bottom left chart shows kind of where the coin redistribution has been taking place in terms of price level. And we've seen, large distribution between 38 and 45K. We've also got a load of long-term holders that are still hodling from significant losses in the kind of near 60K region. But that's kind of what that's showing us. But it's basically lower. We're seeing a lowering of the cost basis of people who are now currently holding Bitcoin when you see that amount of those transactions going through in those areas between 38 and 45K. Okay, so it's a lowering of cost basis, right? Which basically means that the people who are holding are not people who are holding now are not as underwater and kind of don't need to stop out, basically. And then the last chart on the bottom right, profit and loss by return band to exchanges. What does that tell us? That basically gives us a gauge of where you see capitulation events, right? Where you see people taking losses or profits in size on drops in the market. Now, we haven't seen a drop in the market. I mean, obviously, the last drop that we saw, we got down to around 35K or whatever, but you didn't see any of those major capitulations in this metric like you saw in February 18, November, December 18, March 2020, right? So we are yet to see this massive shakeout. And I think that's what we might see in the summer, basically, right? If we do see risk assets roll over, Bitcoin's not going to escape that. And we could see the major capitulation event that then signals major bottoms in the market. And I don't think we've seen that, which makes me think any rally we're getting now is a temporary retracement of the move lower before we start to retest the lows again, basically, right? So that's kind of how I'm reading that stuff this week, yeah? Now, if we move over to the volatility side of things, what we're seeing there. So here we've got the realized implied on the left, and we've got term structure on the right. Okay, so we're seeing despite managing to break above this key resistance area, we haven't really accelerated in a massive way. So realize has remained pretty low. So you can see, over the last couple of weeks, realize was 65.70 and it ratcheted lower, and it's just hugging there around 40.45 now on Bitcoin, which is about as low as the realize kind of gets in crypto. Okay, so pretty low realize still. That's on a 1 week basis, and then the at the money vol on a 1 week basis is also tracking that down to as low as around 55. Right, so very, very low vol, both on a realized and implied basis in crypto, which is why I say, if you've got a directional view and you're not playing it from a day-to-day realized perspective, you're just trying to catch a trend that you think is happening, using short-term optionality is kind of helping you quite a lot, basically, right? Giving you a decent risk reward and a pretty cheap premium spend on those options. Okay. Now, so because of this low realized, dealers aren't really panicking to buy the vol. That's why the vol is where it is. Obviously, they're getting supplied with fresh 1 week upside from the DOVs, as we've been talking about. So dealers aren't finding themselves short a load of gamma and worried that this market's going to run away from them, right? If we got a real break above 50, 52K on Bitcoin, then you would run away from that weekly gamma, and then the dealers maybe wouldn't be quite as long, and you might start to see an uptick in the implied vols. But whilst the market's not above 52K in Bitcoin, I don't suspect that short-dated vol is going to really pick up very much, basically. And for now, the term structure remains in steep contango, right? As you would expect, right? That front end's collapsed. You've got that super steep curve in the front month, which is what we typically see. And from a week ago, that's a pretty significant move down, basically, right? From the dotted blue line was a week ago, the pink one is today, okay? And that's a typical contango curve that you see in a benign realized environment that we seem to be in. And also we're seeing similar things going on in equity vol and cross, well, maybe not cross asset vol, given what we talked about earlier, but certainly equities vol, which is arguably a bit of a driver and a bit of a benchmark for volatility overall. That's also been coming down, right? So we're kind of seeing that. If we then look at just generally sort of floating at the money vols across maturities and what Skew's been doing, you can see, this steady trend lower, right, that we're seeing in crypto implied vol, okay? You can see here over the last couple of weeks, Bitcoin on the left, Ethereum on the right. We obviously had our knee jerk of that short end vol post FOMC, but just all maturities steadily grinding lower over the last sort of 10 days or so. If we then look at Bitcoin skew, that's been pretty range bound, right? So that if you probably can't see the y-axis very closely there, but we're talking about plus or minus 1 to 2 vols between calls and puts. Bitcoin skew range bound, so showing you there's no clear bias for the low delta options in Bitcoin, basically, right? Whereas if you look at the same story in Ethereum, a very positive shift from very negative bias, looking for Ethereum put protection, to now very neutral. And if you look at the white line, it kind of touched positive territory briefly, where you're saying calls were actually trading at a slight premium to puts in the longer end. But basically, for me, such a dramatic shift in Ethereum skew is signaling a pretty significant change in sentiment that may drive some strength in Ethereum prices going forward, which is why I'm a bit more bullishly biased towards Ethereum on the back of that, basically, right? So that's what I'm seeing in skew, and I see that as a little bit of a lead indicator for a potential bout of outperformance from Ethereum. Okay. Then if we look at another interesting chart that I've put up on the report this week, is basically this thing, volatility compression, right? So what I've included here is I've got Bitcoin, Ethereum implied vols, okay, which we know are trading slightly above realized, okay. But we've also got Solana and AVAX realized volatility, okay. And we go back 6 months just to see how these things kind of trade relative to each other, right? So you've obviously got Bitcoin, the pink line, which is the lowest vol. You've got the Ethereum vol above that, usually trades anywhere between 5 and 10 vol points above. But look what the realized, now we don't know, this doesn't show you the implied vol for Solana and AVAX, but it shows you the realized, right? And the idea is you can kind of gauge that if the realized is up there, then maybe the short-term implieds aren't a million miles away, okay? So it shows you that those alternative layer ones, at their peak of realized in the last 6 months, they got to 200 realized vol, right? which was actually in January when they were crashing. And then, you know, right now they're pretty much near their lows, right? AVAX is near its lows. Solana's had a little bit of an uptick recently, right? But that realized vol's at around 80. Now, I've been trading Solana options as well on Delta Exchange. And yeah, the implieds have hit an 80 handle from about a month ago where they were about 100, 110. So they've come down significantly by around 30 vol points in the front end of the curve. I've been using short volatility structures as a way of leaning long Solana. So I've been doing things like call spreads, call ladders, and I've been selling puts to finance them. That trade's worked out pretty well. I'm currently holding a Solana call option actually expiring this Friday, struck at 110. So I'm kind of hoping we can hit 120. And that's kind of my exit point for that call option. But basically, people who've been following my trades and subscribing to my stuff are going to be well aware of what I've been doing there in Solana. You know, this vol compression is typical of what we see in lower vol environments, right? When you see an asset class volatility dropping down, then that relative value between high vol names and low vol names kind of does compress. And what it does is it presents you opportunities if there are liquid options in that space to get into those higher vol assets that are currently being priced quite low vol, if you think there's a bit of a breakout coming in that asset class, right? And for those who are thinking that, yeah, we might have a period of strength in crypto, I would argue, yeah, calls on the likes of AVAX and Solana are probably going to outperform massively versus calls on the likes of Ethereum and Bitcoin, basically, right? So that's not a bad way to be looking to potentially position yourself, yeah? Okay, and then the last chart I want to go through before we wrap up is the usual block sniffer and crypto option flows. Okay, so here are the crypto option flows. So what's been going on? It's actually been a relatively quiet week for crypto option flows because there's a bit of a fatigue past the kind of March options expiry. And it doesn't look like everyone's rolling all their exposure and stuff that was rolling off. So for me, I've circled a few things. Obviously, all of the local stuff in the close vicinity to spot in the short end has been DOV hedging. So we've got a bit of DOV hedging going on both Bitcoin and Ethereum there. But in terms of the more interesting flows, we started to see call options being traded. There was a big clip of May 60,000 calls that went up at the weekend, which was well timed for that breakout. There's also been some call buying in longer maturities like June, September, as you can see, and even December there with the orange. So some Bitcoin sort of optimism coming through via call option flows. We also saw some Ethereum April call options being traded in a decent clip. I suspect it's a buyer given the directional bias, but it may well be an overwriter, right? So I don't know that with 100% certainty because sometimes it can be a little bit misleading, like whether these are buys or sells from the way the data kind of shows itself on these places. There's also been a very big clip. If you look at the open interest changes, which is the kind of charts below that, the block sniffer, you can see there's been a massive uptick in open interest in the September 1,000 puts on Ethereum, right? Which is quite significant, right? Order of magnitude of 30,000 options. Again, I would suspect that's a crash protection buyer buying themselves a load of time for crypto to roll over by September, and then they kick into a load of Greeks. But actually, there's a suspicion there that might have been selling, which I think is surprising that it's selling. That's what it's showing up as. If you look at the GVol analytics, I would be happy to know for sure if that is a buyer or seller. Doesn't seem like an option worth selling for $20 or whatever, $30 what it's worth. Maybe it was worth a little bit more before the recent rally, but still, that's not a smart option to be selling, in my opinion, right? But like I say, that's kind of the main flows, right? So just a bit of call buying on Bitcoin and then a bit of a mixed picture on Ethereum, basically, right? And that's it from me this week, a fairly short one on crypto. Anyone got any questions? Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot. soon.